Hello friends, welcome to AS 28 again. We are discussing reversal of impairment loss. So today we are discussing reversal of impairment loss. Impairment loss can be reversed. If impairment loss was provided under this standard, the impairment loss can be reversed. But there is a limit on how much impairment loss can be reversed. So first you tick mark it as very important. Tick mark paragraph number 20. What is that? Paragraph number 23 as very important. Para 23 in our notes. Para 23 of our notes. We can reverse the impairment loss, but there is a limitation. The carrying amount of an asset after reversal of impairment loss shall not be more than lower of the following. The carrying amount of the asset after reversal of impairment loss shall not be more than lower of the following. So little complex statement. That means you can reverse the carrying amount. After reversal it should not exceed. After reversal it should not exceed lower of the following two. Which following two? Recoverable amount and second carrying amount that would have been determined had it not been impaired earlier. Carrying amount, if the asset was not impaired earlier, then today what would have been its carrying amount. So calculate carrying amount again, assuming that you had never provided the impairment. So you can continue to depreciate at the original rate and find out the notional carrying amount. So I will call it notional carrying amount. Notional carrying amount means the carrying amount if there was no impairment loss provided earlier. Okay, so let us just understand. Your current carrying amount is 1 lakh rupees. The date you have indication of reversal of impairment, find out the book value, and you find your book value is today 1 lakh. Calculate two things. Calculate recoverable amount. Suppose it is rupees 1 lakh 20,000. Calculate notional carrying amount. Calculate notional carrying amount means carrying amount which would have been determined had it not been impaired earlier. Had it not been impaired earlier, notional carrying amount is suppose 1,10,000. Recoverable amount is 1,20,000, but had you not provided for impairment loss, the carrying amount today would have been 1,10,000. So which is the lower of the two? Take lower of the two. The lower of the two is rupees 1,10,000. So what is the reversal of impairment loss? Reversal of impairment loss will be 1,10,000 minus current carrying amount 1 lakh, that is 10,000. So impairment loss will be reversed by 10,000 rupees. I will give you another example now. Suppose the recoverable amount is 1,05,000 and the notional carrying amount is 1,10,000. Then in that case I will take lower of the two, which is 1,05,000, and the reversal of impairment will be 1,05,000 minus 1 lakh, and that is equal to 5,000 only. So you cannot exceed lower of the two, recoverable amount. You can't exceed recoverable amount, because the moment you exceed recoverable amount, again you have to provide impairment loss. And at the same time the standard says you can't exceed the notional carrying amount. That is the carrying amount you would have determined if there was no impairment loss. If you want to exceed the notional carrying amount, then you have to apply accounting standard 10 for revaluation. Again, AS 10 has got certain rules for revaluation of asset more than the carrying amount, but that is under AS 10, that is not under AS 28. So asset can be revalued more than 1,10,000, but then you have to apply accounting standard 10 rules for the purpose of revaluation. Now we'll come to question number 28. We'll come to one important question number 28. We'll come to one important question number 28. Okay, very important question. The students should mark very important. You will not find this question in the study material, and you will not find this question explained to you in other books or other notes also. So I am requesting you to please pay attention, participate in the discussion. X Limited acquired a plant on 1/4/2010. Cost of the plant is, so on 1/4/2010, the plant was purchased for 200 lakhs. Then it says cost is 20, useful life is 20 year, residual value is 20 lakh, depreciation policy straight line method. As on 31st March 13, the company determined recoverable amount of plant to be 100 lakh. So how many years are over? Please reply. 3 years are over. So we are going to provide depreciation from 2010 to 2013. Depreciation will be 200 minus 20 lakh divided by 20 years multiplied by 3 years. So annual depreciation is 9 lakh. 3 years are over. So total depreciation provided is 27. Therefore balance on 31st March 2013 will be 173 lakh. And what is the recoverable amount? Recoverable amount they have given is 100 lakh. Recoverable amount is 100 lakh. So do you think there is an impairment loss? The answer is yes. You will have to provide for impairment loss of 73 lakh. What will be revised carrying amount? Revised carrying amount after impairment loss will become 173 minus 73, 100 lakh. Remaining life, total life was 20 year minus 3, so now 17 years are remaining. Next line, impairment loss was recognized. So impairment loss was recognized 73. On 31st March 23, based on the positive information, the entity reviewed the recoverable amount. So how many years are over? 3 years are over. 3 more years are over. So less depreciation. Less, we can say revised depreciation. Depreciation will be now provided on 100. Residual value is 20. Number of years 17 into 3 years. So per year depreciation is 4.706 lakh into 3. So total depreciation provided in the year 2013-14, 14-15 and 15-16 is coming to 4.118 lakh. So what is my carrying amount on 31st March 16, carrying amount on 31st March 16, 100 was the carrying amount. Now we have depreciated over 3 years 14.118. Therefore, now the carrying amount is 85.882 lakhs. The carrying amount on 31st March 18 is 85.882 lakhs. Now they have got indication of impairment and they have found that recoverable amount is 150 lakh. So the question is reversal of impairment loss. Reversal of impairment loss. Impairment loss will be reversed subject to lower of the following two numbers. So first you compute recoverable amount, which is given in the problem here as 150 lakh, and second you calculate notional carrying amount. Notional carrying amount means if you would not have provided this impairment loss here, then today what would have been the carrying amount? So forget the impairment. You purchase an asset on 1/4/2010 for 200, and if I have to find the balance on 31st March 16, what would be the carrying amount? So the carrying amount will be, you have purchased the asset for 200, depreciation originally 9 lakh, assuming that the same depreciation you will provide 9 lakh for 6 years. So that is equal to 200 minus 54 is equal to 146 lakh. Okay, 146 lakh. My existing carrying amount in the book is 85.882. Recoverable amount today 150. Notional carrying amount is 146. I will take lower of the two. Lower of the two will be 150 versus 146. I can't increase beyond 146. Therefore, reversal of impairment loss will be equal to 146 minus your existing carrying amount 85.882, and anybody who can tell me what will be the amount? The amount will be equal to rupees 60.118 lakhs. The amount will be rupees 60.118 lakh. Is right? And then you have to pass the journal entry for reversal. I have to reverse this amount. This is a non-revalued asset, so the reversal will be credited to profit and loss account. The student will be happy to note that I have given the answer in the notes. Okay, same thing you can just copy from the notes in your notebook. The answer is already printed. Do not worry. Do not worry, the answer is already printed. You will today solve on your own as homework. Same thing. Now the question is journal entry for 60.118 lakh. Journal entry for reversal of impairment loss of 60.118 lakh. When we had created impairment loss, student will remember the first entry was impairment loss to provision for impairment loss. Now reverse it. It will become provision for impairment loss account debit to reversal of impairment loss. 60.118 first entry, so that in the balance sheet when you will present the asset, the provision for impairment loss will be reduced by 60.118, and this amount will be credited to P&L account. Reversal of impairment loss account debit to profit and loss account, being reversal of impairment loss. Now, if there is a non-revalued asset, then the impairment loss will be credited to P&L account. But if there was a revalued asset, so reversal, if it is a non-revalued asset, credit to P&L account. That is simple, what we did just now. But if it is a revalued asset which was revalued earlier, and we had provided for impairment loss, then what I'll do, first credit P&L account to the extent debited earlier. Suppose when we provided the impairment loss and we have debited 50, so 50 I will first credit to P&L account, and balance amount will be credited to, guess, balance amount will be credited to which account? Balance amount will be credited to revaluation reserve account. Balance amount will be credited to revaluation reserve account. Balance amount will be credited to revaluation reserve account. Okay. So what will happen to the carrying amount of the asset after reversal of impairment loss? After reversal of impairment loss, carrying amount will increase. What will happen to depreciation? Depreciation will also increase. Depreciation will be provided on revised carrying amount over the remaining useful life. But because the carrying amount has increased, depreciation charge for future year will also increase. Now next point is reversal of impairment loss on a cash generating unit. So just like we have discussed reversal of impairment loss of single asset, the same principles you will apply for cash generating unit also. In case of cash generating unit, if we had allocated goodwill to the CGU, students should revise the previous lecture. CGU 100, goodwill allocated 50, after adding goodwill 50, recoverable amount is 90, impairment loss is 60. Impairment loss is 60. Now the issue is, suppose I have to reverse the impairment loss. Where will I reverse first? Will I reverse over CGU first, or will I reverse over goodwill first? In case of reversal of impairment, which asset will be reversed first? Impairment of which asset will be reversed first? Option A, CGU. Option B, goodwill. Which one will be reversed first? Suppose there is a reversal of 10 rupees. Should I reverse over CGU or should I reverse over goodwill? Please reply. Come on. Which assets impairment will be reversed first? So the answer is first to the asset other than goodwill. First to the asset other than goodwill. So that means CGU. And if CGU has more than one asset, then in the proportion to their carrying amount. So if I have to reverse 10 over CGU, and CGU has two assets, M1, M2, we will allocate in the ratio of their existing carrying amount. We will allocate in the ratio of their existing carrying amount. What about goodwill? Should we reverse the impairment loss on goodwill also? The answer is only if certain conditions are fulfilled. Otherwise, impairment loss on goodwill will not be reversed. First, reverse the impairment loss over the assets of the CGU in the ratio of carrying amount, and then to goodwill double underline if certain conditions are fulfilled. Otherwise, you are not going to reverse the impairment loss on goodwill. Sir, why don't we reverse the impairment loss of goodwill? Because if we reverse the impairment loss of goodwill, what does it mean? What does it mean? It amounts to creating self-generated goodwill. That means again the goodwill of the company has increased. That is why there is a reversal. So you are trying to record the self-generated goodwill. Very important line, not given in your module. The reason, the logic why we do not reverse impairment loss on goodwill, because it will result into recognizing self-generated goodwill. AS 26 does not allow recognition of self-generated goodwill. Is it right? I hope you have studied AS 26 intangible asset, where the self-generated goodwill, self-generated brand are not created. Okay, are not created. But if two conditions are fulfilled, then goodwill can be reversed. Next line, when we are reversing the impairment loss, it means the carrying amount will increase. When we are reversing the impairment loss, it means carrying amount will increase. That means after reversal of impairment loss, carrying amount should not exceed lower of the two. Same logic, we have taken a question also. It's recoverable amount if determinable, because you are going to reverse the impairment loss on the asset of the CGU. The carrying amount of the asset of CGU will increase, but there is a limitation. The limitation is that it should not exceed lower of the two, recoverable amount if determinable, or carrying amount that would have been determined if the impairment loss was not provided. Had you not provided impairment loss, what would have been the carrying amount? That I will call notional carrying amount. Is it right? That I will call notional carrying amount. So after reversal, the carrying amount should not exceed lower of the two, impairment recoverable amount and notional carrying amount. In case of CGU, if suppose you have two assets or three assets, carrying amount is 100. Okay, and I want to reverse 20. So after reversal it will become 120. But the notional carrying amount is 110 only. Had I not impaired this asset, today, in the absence of impairment, this asset's carrying amount would have been only 120. So I can't reverse 20. I will have to reverse only 10. And the 10 which could not be reversed, in case of machine 1, you can use that for reversing impairment loss on machine 2, but subject to same limit. After reversing impairment loss on machine 2 also, the carrying amount of machine 2 should not exceed lower of the two, recoverable amount and the notional carrying amount. And whatever cannot be reversed will lapse. You cannot shift the unutilized amount from CGU1 to CGU2. This is not allowed. Okay. Now next paragraph number 26, reversal of impairment loss of goodwill. Reversal of impairment loss on goodwill. So you have to remember that impairment loss on goodwill usually cannot be reversed. First principle is usually can't be reversed, as it will amount to self-generated goodwill. Second thing, can be reversed if two conditions are satisfied. If two conditions are satisfied, these are two difficult conditions to be satisfied, but if these two conditions are satisfied, then one can think about reversal of impairment loss of goodwill. Is it right? Then one can think about reversal of impairment loss of goodwill, and the first condition is, I will read from your book, paragraph 26, point number A. The impairment loss was caused by a specific external event of exceptional nature not expected to recur. So first condition is that the impairment loss was caused by a some specific external event. Okay, impairment loss was caused by some specific external event, and it is not likely to recur, it is not likely to occur again, and that means both conditions are to be fulfilled. Subsequent events have occurred, and that have reversed the effect of that event. Okay, suppose for example, extreme example, but you will like it. Suppose Taliban captures the power. Taliban captures the power, and now Taliban starts ruling the country. So Taliban will say, no man will shave his beard. No man will shave his beard. If anybody is found shaving the beard, his head will be shaved off forever. Okay, so a company which is manufacturing shaving kits, in that country. Now see what will happen to this company which is manufacturing shaving kit, where the new government came to power and it has put a ban on shaving. Every man will have to grow beard. Okay, whatever may be the shape or size, whether you like it or not allowed to shave. So this company manufacturing shaving equipment, shaving kits, will find that its value in use has gone down, because you can't now sell your product, and it had some goodwill in the books which it had to write off. But then after 3 years, a new government came to power, a more liberal government came to power. It says, we will remove the ban imposed on shaving by the previous government. That Taliban does not exist anymore now. Taliban has been thrown out and they have gone back to their own country. So subsequent event has reversed the effect of the earlier event, and that earlier event is not likely to occur again. In that case, in this exceptional case, extreme case, you can reverse impairment loss of goodwill, but not in the normal course. Not in the normal course. In the normal course, if you have provided impairment of goodwill, usually goodwill impairment loss cannot be reversed. Okay, now we'll solve two questions on reversal. So please pay attention. Questions have been taken from reference books to make the doubt clear. Important question number 29. Important question number 29. The calculation refers to impairment loss suffered by Z Limited on 31st December 2004. Now they have done some calculation already. Goodwill net asset total. If you are attentive from the beginning, you will understand even whenever there is an impairment loss, first we'll eliminate goodwill. They have already done in the problem. Carrying amount was 300, 900, 1200. A similar question we had done. Impairment loss provided. Total impairment loss is 500. What they did, first they eliminated goodwill 300, balance they have adjusted against the net asset. After providing impairment loss, goodwill is 0, net asset is 700, total is 700. So that is first thing, provision for impairment. They have provided for impairment. Now the question says, there has been a favorable change in the estimate of the recoverable amount of Z's net assets since the impairment loss was recognized. The recoverable amount is now 100 lakh, 100 million on 31st December. The net asset carrying amount would have been 720 million on 31st December 2005. Assets are depreciated at 20%, reducing balance. Show the accounting treatment for reversal of impairment loss. So what we'll have to do, we'll have to first find out what is the current carrying amount. First you understand, I have printed the answer in the book and exactly that is what you have to write. The student will focus on understanding what is the current carrying amount. Your asset was 700 after impairment and the depreciation is 20%. How many years are over? 31st December 2004 and today is 31st December 2005. So 1 year is over. Only 1 year is over. So the carrying amount of the asset after 1 year from the date you provided impairment will be 560. Carrying amount 700 minus depreciation at the rate 20% for 1 year is 560. Now we have got indication of impairment. So I will calculate recoverable amount. As per the question, recoverable amount is 800 million. I will compute notional carrying amount. That is, if we would not have provided impairment, the carrying amount today would have been 900 minus 20%, that is 720, which is given in the problem also. If problem would not have given 720, this is how you will compute. 560 is my current carrying amount. So I will reverse. How much I will reverse? How much I will reverse? Reversal of impairment loss will be, either I can go to 800 or 720, but I will take lower of the two. The lower of the two is 720. So reversal will be 720 minus 560. Reversal will be 720 minus 560 and that is equal to 160. Reversal will be 160 and therefore the revised carrying amount after reversal will be how much? You were 560, you reverse 160. So reversal, after reversal the carrying amount will be 720 and then in future year you are going to depreciate 720. So that is how we will compute the reversal of impairment loss. there is no reversal of impairment loss of goodwill. There is no reversal of impairment loss of goodwill because the two conditions that was given for reversal of impairment loss of goodwill is not mentioned in the problem. The problem does not mention that the impairment loss in the first case, in the first incidence, was due to some specific external event of exceptional nature. Nothing is given. So we will not reverse impairment loss on goodwill. Is it right? So now you read the answer on your own. You will first calculate the carrying amount that would have been determined if there was no impairment. Recoverable amount 800 already given. Existing carrying amount is 560. So I have to reverse so much amount such that after reversal it should be lower of 720 or 800. So the lower of the two is 720. So I can reverse maximum 160, and therefore the carrying amount after reversal would be 720. In future the 720 will be depreciated. One more question we will take. Question number 3030. Very important. Your institute material will not have this problem. Okay, they have only some easy questions. They don't have 30 questions. Trust me. So you need to practice really hard for getting good marks, otherwise your mark sheet will be impaired. Okay, so if you don't want that your mark sheet should be impaired, you must practice all 30 questions that I have taken in the class, and you will get one of these questions in your exam also, nothing beyond that. Question number 3030. Okay, this time you will have to solve, write the answer in your booklet. Your booklet does not have the answer. Your booklet has the format of the answer, but the answers are not printed. You will have to do it, otherwise this important question you will not be able to handle. So I am going to explain, you are going to solve. Let us begin. At the end of the year 2000, A Limited acquired assets of B Limited at a price of 90 lakh. The fair value of the asset was 75 lakh to be depreciated over 10 years. 90 lakh is the purchase consideration paid. 75 lakh is the value of net asset acquired. Therefore, goodwill will be 15 lakh. This net asset will be depreciated over 10 years. Goodwill will be amortized over 5 years. Amortization period for goodwill is 5 years, net asset is 10 years. In the beginning of year 2003, oh my God, a new government was voted to power. A new government was voted to power. This government immediately announced some policy by which the main activity of A Limited were severely affected. By the end of 2003, the company identified the indication for impairment and the recoverable amount was 49 lakh. So first you have to calculate impairment loss in the year 2003, and for that you will have to find out the carrying amount of net asset and goodwill by depreciating carrying amount of the net asset for 3 years by amortizing goodwill for 3 years. After computing the carrying amount, compare with recoverable amount of 49 lakh. Carrying amount versus recoverable amount. If recoverable amount is lower, there is an impairment loss. First adjust against goodwill. Balance, if any, adjust against net asset. Then the value of goodwill and net asset will go down. If the value of goodwill becomes 0, there is no further amortization of goodwill. net asset will be depreciated over remaining life. Remaining life is 7 years. 3 years are over. So over remaining 7 years, you will depreciate the revised carrying amount of the net asset. Now what happened during the year 2005, after 2 years? So you are going to depreciate net asset for 2 more years. You will get the carrying amount in the books of net asset at the end of year 2005. Now what will you do? You got an indication of reversal of impairment. A new government came to power. It had adopted liberal policies which are expected to improve the working position and profitability of A Limited. The recoverable amount at the end of the year 2005 is 40 lakh. So once you got the indication that there might be improvement in the recoverable amount, you found that recoverable amount is 40 lakh. Question would be now, how much is the impairment loss in year 2003 and how much will be reversal of impairment loss in the year 2005? Very good question. Very, very good question. So let us first find out part 1. What is part 1? Impairment loss in the year 2003. Then we'll calculate the carrying amount at the end of year 2005, and finally we will calculate how much impairment loss can be reversed. Okay, so I have given the format in the notes to save the valuable time of our hard working students who are running short of time for the exam. Please write down in your own handwriting, in your own book. Cost of acquisition, write down. As per our discussion, we have paid 15 lakh towards goodwill and 75 lakh towards net asset. Total consideration paid 90 lakh. 3 years are over. So we are going to provide depreciation on asset, amortization of goodwill. For goodwill amortization, the life is 5 years. Take on your calculator 15 lakh divide by 5 years into 3 years. So total impairment will be 9 lakh. Now take on your calculator 75 lakhs divide by 10 years into 3 years. For asset, the life is 10 years. So total depreciation for 3 years is 22 lakh 50,000. Therefore total is 31 lakh 50,000. So this is my carrying amount at the end of the year 2003. Please deduct 9 lakh from 15 lakh, 6 lakh, 52 lakh 50,000, 58 lakh 50,000. At the end of this year, there was an indication of impairment. So we have computed the recoverable amount and we found that the recoverable amount is 49 lakh. Compare these two. Do you think there is an impairment? Yes, because carrying amount is more than recoverable amount. So the impairment loss is, let me calculate, 58 lakh 50,000 minus 49 lakh. 9 lakh 50,000. Impairment loss is 9 lakh 50,000. How do you allocate it? First you will allocate 6 lakh rupees towards goodwill. Goodwill will be impaired first, and balance 3 lakh 50,000 you are going to allocate towards the asset. Write down please. 6 lakh allocate to goodwill, 3 lakh 50,000 allocate to asset. Already discussed in the last 2 lectures. Whenever there is an impairment and if goodwill can be allocated reasonably to that asset or CGU, first impair goodwill, then impair net asset. Revised carrying amount at the end of 2003, goodwill is 0, asset will be 49 lakh, total 49 lakh, total 49 lakh. After that, 2 more years have passed. This 49 lakh will be depreciated over remaining 7 years, 7 lakh per annum into 2 years, 7 lakh per annum into 2 years, 14 lakh. So what is the carrying amount at the end of 2005 now? The date when you got the indication of reversal, what was the carrying amount? 35 lakh. The carrying amount was 35 lakh, which means now my carrying amount is 35 lakh. First I'll explain the reversal and then we will write down the answer. Next 30-40 seconds don't write. My current carrying amount of the asset is 35 lakh. This is my first thing I need to find out, which is 35 lakh at the end of 2005. Because we got the indication of reversal, we'll compute the recoverable amount. Fortunately in the problem, recoverable amount 40 lakh is already given. Then I will compute notional carrying amount. That means if suppose, just suppose, all this impairment would not have been provided. Suppose there was no impairment, how much will be the carrying amount of the asset after 5 years? The carrying amount of this asset after 5 years will be 75 lakh minus 75 lakh divided by 10 into 5 years are over. So that is 37.50 lakh. Had we not provided impairment, if we would not have provided impairment, today the net asset carrying amount would have been 37,50,000. So how much maximum I can reverse? The maximum I can reverse, how much maximum I can reverse? Yes, maximum reversal of impairment loss will be 37.5 lakh minus 35 lakh, 2.5 lakh. Maximum reversal would have been 2.5 lakh. We will not reverse impairment loss on goodwill. After 5 years, the carrying amount of goodwill in any case would have become 0. After 5 years, because goodwill life is 5 years. So after 5 years, the carrying amount of goodwill would have become 0 in any case. So no need for reversal of impairment loss on goodwill. So let us write the answer for reversal. Very, very important question we are solving. Question number 3030, not in your study material. Okay. So first you write down point number A, carrying amount 52,50,000. Point number B, less depreciation 7,50,000 into 2. 7,50,000 per annum we are providing at original cost. So total depreciation would have been provided for next 2 years based on original depreciation rate would have been 15 lakh. So my notional carrying amount, write down notional carrying amount, that is carrying amount had there been no impairment. Carrying amount had there been no impairment, 37,50,000. 37,50,000. Recoverable amount at the end of year 2005 already given. Recoverable amount, write in bracket here, given 40 lakh, and the current carrying amount, actual carrying amount appearing in the book 35 lakh. So we are here, we have to choose lower of the two. You have to choose lower of the two. After reversal, the carrying amount should not exceed lower of recoverable amount and notional carrying amount. So which is 37,50,000. So I will have to reverse, write down 2,50,000. Reversal of impairment loss 2,50,000. Is it right? After reversal of impairment loss, the carrying amount will become 37,50,000. If you want to write, your current carrying amount is 35 lakh plus reversal 2,50,000. Now your book value will again become 37,50,000 and you have to depreciate that amount over remaining 5 years. If you want to revalue upward, you will have to go to accounting standard 10. Okay, and write down there is no reversal of goodwill impairment. There is no reversal of goodwill impairment because 5 years are already over. So therefore goodwill carrying amount after 5 years would have been 0. Now the next paragraph is impairment in case of discontinuing operation. Impairment in case of a discontinuing operation. What do you mean by discontinuing operation? That is an operation which the management have decided to discontinue. Okay. AS 24 deals with discontinuing operations. Accounting standard 24 deals with discontinuing operations. So just two things. When the management decides to discontinue an operation, when decision to discontinue an operation is taken, when decision to discontinue an operation is taken, it is an indication of impairment. It is an indication of impairment. And when decision to not go for discontinuation, when the management decides that we are not going to discontinue, we will revive, we will continue, it is an indication of reversal. It is an indication of reversal of impairment. If a company wants to discontinue an operation, it is an indication of impairment. But if the company decides that sorry, we are not going to discontinue, sorry, we are going to continue, we believe in ourselves, we want to continue, refer AS 24, and that is an indication that there is a reversal of impairment, and you will have to sit down and apply the reversal of impairment provisions. Then we have disclosure paragraph. What are the disclosure requirement for each class of asset? Following shall be disclosed in the financial statement. It can be with any other information like fixed asset schedule also. So what are the disclosure requirement? You will have to disclose the amount of impairment loss. That is how much impairment loss you have recognized in P&L account and under which head. So either you can put it under the head depreciation and amortization, or you can put it under a separate head. So you have to disclose that head, and if you have reversed any impairment loss which is included in the P&L account, you will have to disclose under which head you have reversed impairment loss. In case if you have debited any impairment loss to revaluation reserve, disclose it. In case if you have reversed any impairment loss and credited to revaluation reserve, you need to disclose that. Next paragraph is in case if the entity is following AS 17. What is AS 17? Segment report. then you have to make following disclosure for each reportable segment on the enterprise primary format. Under AS 17, there are two formats: primary format where all disclosures are given, and secondary format where limited disclosures are given. So if an asset belongs to a segment which is a primary segment, and if this asset is impaired which belongs to a primary segment, then you have to make following disclosures so that even segment report can give more important information to the user. Those who are reading segment report will also be benefited if the asset of a particular segment has been impaired. So what are the disclosure for primary format? The amount of impairment loss recognized in the statement of profit or loss or against revaluation reserve during the period. This is the information to be given in primary format. And the same thing, reversal of impairment loss in P&L account or revaluation reserve. Next is last 2-3 lines for disclosure. In case the impairment loss or its reversal on an asset or cash generating unit is material to the financial statement as a whole, if the impairment loss is material or reversal is material to the financial statement as a whole, then more details are given, like reason for impairment, circumstances causing impairment, amount, nature of asset, description of cash generating unit, whether net selling price or value in use is recoverable amount, whatever discount rate is used will be disclosed. So these are the disclosure requirement for, these are the disclosure requirement for AS 28. Now we'll take 4 MCQs. Quickly reply. If there is an indication that an asset may be impaired, but the recoverable amount of the asset is more than the carrying amount of the asset. There is an indication that an asset is impaired, but the recoverable amount of the asset is more than the carrying amount of the asset. The following are true. No further action is required and the company can continue asset in the book at the book value itself. Option B, entity should review the remaining useful life, scrap value and method of depreciation and amortization for the purpose of AS 10. So if there are indication of impairment, even if there is no impairment, but one must review the remaining useful life, probably that might have changed. One might review the scrap value, one might review the method of depreciation. Let us read other option also. The entity can follow either A or B. This is not correct. This is a wrong option. The entity should review the scrap value and method of depreciation and amortization for the purpose of AS 10. This is not true because the entity will have to also review remaining useful life. So the best answer out of the 4 is option B. When there is an indication of impairment, even if the asset is not impaired, one has to revalue useful life, scrap value, method of depreciation. Option B is the right answer. In case goodwill appear in the balance sheet of the entity, goodwill appears in the balance sheet, which of the following is true? So this we have discussed. I have given a graph also. Apply bottom up test if goodwill cannot be allocated to CGU. Then this is wrong statement. Apply top down test if goodwill cannot be allocated. Apply both bottom up test and top down test if goodwill cannot be allocated to CGU. This is the right answer. The reason being, if goodwill cannot be allocated, still we will first apply bottom up test without allocating goodwill, and then we'll perform top down test by allocating goodwill to the larger CGU. Okay. So this is the right option, and they have written apply either bottom up test. There is no either or. It is wrong. You have to apply both the test. First bottom up test without allocating goodwill, and then top down test by allocating goodwill to larger CGU. Then the third question is, in case of corporate asset in the balance sheet of an entity, the following is true. Corporate asset, same question which was for goodwill. Apply bottom up test if the corporate asset cannot be allocated to CGU under review. Apply top down test if corporate asset cannot be allocated to CGU under review. Apply both. This is right. First you apply bottom up test, then apply top down test if corporate asset cannot be allocated to CGU under review. And the last one is either or. There is no either or. The process is first apply bottom up test without allocating corporate asset in this example, and then apply top down test by allocating corporate asset to larger CGU. Answer C is right. And one more, in case of reversal of impairment loss, which statement is true? Goodwill written off can never be reversed. This is a false statement because it can be reversed subject to two conditions, which is printed in the book. I am not reading it, you can check. Reversal is possible subject to two conditions. Goodwill written off can be reversed without any conditions to be fulfilled. This is also false. Wrong answer, wrong answer. Goodwill written off can be reversed but subject to two conditions. Third one is right. Goodwill can be reversed only if certain conditions are fulfilled. If in the note these three words are not printed, you are requested to type it on your or write it on your own. Goodwill written off can be reversed if certain conditions are fulfilled. So third one is the right answer, and the last one, goodwill written off can be reversed. The answer is it is not a general statement. The answer is it can be reversed only if certain conditions are fulfilled. So the option C is right. Okay, option C tick mark. So this completes our discussion on AS28. I have also given you some more questions on cell practice portion. If you get time, you should practice the cell practice part also. Thank you very much for understanding and watching these lectures on AS28. Dear students, we have been trying very hard to make these high quality lectures available to you. If you want to get the full benefit of accounting standards lecture, please buy accounting standard book. Okay, it is not a big amount compared to what you are paying as in terms of the video lecture 10-20,000 rupees. You can purchase accounting standard book from our website vinod.in, or these books are now available on Amazon also. So you can go to Amazon because you may be more comfortable buying with Amazon. So we have uploaded the book on Amazon also, and now our intermediate accounting standard book, intermediate financial management book, you can buy accounting standard book, financial management problem and solution book, financial management, you can buy compiler also, that is called question bank, which has large number of questions. You can buy FM summary chart from either our website, or you can also purchase from Amazon. If you want full lecture, all topics covered in detail, you can purchase from our website vinod.in. I will teach you two subjects. I take advanced accounting and I take financial management, all covered in detail. Nothing is left out. As you can see from our lectures on accounting standard, Just now you have seen AS 28, 30 questions we have taken in class, 30. Which other academy, class, teacher or institute takes 30 question, all questions in the classroom? Okay. So please wait, we are going to start AS 15. We are going to start AS 15. We are going to start AS 15. Please share these videos with your friends every day. Share in all the groups. If you are watching this video, like the video. If you have some comments to write, please write down in the comment section. More importantly, subscribe to the YouTube channel and share this video with your friends and ask them also to subscribe. That is one service you can do for getting these lectures on the YouTube. Every student will try to forward it to maximum number of students you can. Okay, if you have 200 students as your group, forward it to 200 students in your group and ask them to join, ask them to subscribe, ask them to like. You are the best person who have watched this lecture, who can give good feedback to your friends. So now let us start AS 15, employee benefits. Employee benefits deal with the benefits paid to employees. Companies have large number of employees in their organization, and some of them, they have got more than lakhs of employees. Like for example, company like TCS, Infosys, Wipro, HCL, or say Tata Motors, Reliance, etc. Do you know how many employees they have? More than several lakhs. Like 4 lakh, 5 lakh employees in a company, which is sometimes more than the size of a country. Small countries don't have that much population, and our companies are employing some 3 lakh, 4 lakh, 5 lakh employees. Their global head count is more than 6 to 7 lakhs, and they have to offer different types of benefits to the employee to retain the employee, to keep them in good mood, to motivate them, to make them more productive. Therefore, our institute thought that we should come out with a comprehensive standard on employee benefit. You might have studied some basic accounting of employee benefit, like when you are in standard 12, you have done accounting of wages, salaries. Okay, you have passed the entry wages account debit to bank account, being wages paid. At the end of the year, if there is a wage outstanding, then you will pass an entry wages account debit to wage outstanding account. Okay, and this wage outstanding goes to balance sheet. If there is some prepaid wages, you have passed the entry in 11, 12 standard, prepaid wages account debit to wages account, and that goes into your asset side of the balance sheet. That's it. Or it, instead of wage, it could be salary. In some problem, 11, 12 standard deals up to this only. And then in some schools or college or course, they don't even let you pass the entry. They will simply say add closing outstanding wage minus closing prepaid expense. So all this plus minus thing also they have taught you. But that is not enough. Wages and salaries are not the only benefits provided by the employer to the employee. Nowadays, to keep the employee in good humor, you have to give them perquisites, housing, car, Wi-Fi, mobile, club membership, and not only you have to give him benefits up to the retirement, you have to also give him benefits post retirement also, like you have to pay him pension, PF, gratuity, superannuation, post retirement housing, post retirement medical. Oh my God. So one of the most important expenses in the P&L account nowadays for many companies, and for some company it is a major component of their total cost, is the employee benefit. Therefore, we have a standard dealing only with different forms of employee benefit and their accounting treatment. Wrong treatment can either increase the profit or may decrease the profit. Wrong treatment may result into liabilities not getting recognized in the balance sheet or more liabilities getting recognized in the balance sheet. Both are not right. Financial statement should represent true and fair view. So the objective of this standard is, which we are going to discuss in the next 1 or 2 days, you have to be present every day to understand, is that the objective is to record employee benefit expense properly, correctly. First is we will learn how to record employee benefit expense. Second, we will learn that how to record the benefit when the employee renders the service and the employer consumes the benefit of service over a period of time, and how to recognize liability relating to employees where the employee have rendered the service but the benefit is not yet paid. Like for example, gratuity. Employee has rendered the service but gratuity will be paid after he retires. Or example, pension. So how to do accounting of such expense where the employee has rendered the service but the benefit are not yet paid. It will be paid on or after the retirement. Now do not forget, all accounting standard except AS3 cash flow statement, they want you to follow accrual system of accounting. As and when the expenses have been incurred, it should be provided for. As and when the expenses have been incurred, it should be provided for, even though expenses are not paid. So this standard also, like other standards, will promote accrual method of accounting. That is, we will have to create liability for those employee benefit which have not been paid. We have to bring into the books liability, which is called provision, in the books if the benefits are not yet paid even though the service have been received. Or maybe in some cases we'll have to also bring in the books prepaid expense if the benefits are not yet received but the payment has been made. So both are possible, but most of our focus would be on bringing liability into the books for services received but payment not made. So let us go into the details. Who is an employee? The standard does not define the term employee. Interestingly, even though we are dealing with employee benefits, the standard does not define who is an employee. The definition is an inclusive definition. These are included. That does not mean this is an exhaustive list. Those who are not included here are or can also be the employee. So employee includes employee, family members of employee who are dependent on employee, and spouse. Why will family member and spouse be coming under the definition of employee? Because under some plans there is a concept of family pension. Family pension means even if the employee dies, either the spouse or the family member will be given family pension for some years. So even family member or spouse, for the purpose of accounting, would be treated like an employee, because you will have to pay benefits to spouse or the family members. Then whether directors are also covered? All directors are also considered as employee. All directors are also considered as employee, even though employer-employee relationship may not exist. So as per the standard, whether you call it managing director, whole-time director, part-time director, they will be coming under the purview of this standard, under the scope, even though employer-employee relationship may not exist. But interns, like what you do, articleship, articles, in some courses they call it interns, in our course we call it articles. Apprentice, contract laborers are not employees because they are contractual. These are contractual and they are not covered under employee. They are not going to be covered under AS 15. Today you do one homework, a theory question is there. You will read the theory question. If you have doubt, you will ask me in the next lecture. You can mail me also your doubt. What are the kind of employees covered in AS 15? Already discussed in the above paragraph. What are the kind of employees covered? You have to refer the above paragraph, and whether a formal employer-employee relationship is necessary or not for the benefits to be covered under the standard. Whether a formal employer-employee relationship is necessary. So whether there is a need for a formal contract. So that the answer would be no. Like with respect to directors, there is no formal employer-employee relationship. So there can be employee who will come under the purview of this standard. Okay. So question number 1, I have already covered in detail, but still I would request you to read the answer. This question is taken from study material. Theory question. Who is an employee who is covered by AS 15? And whether a formal relationship is necessary? So formal relationship is not necessary. I will come to the conceptual part now. Point number 3, very important. Point number 3, very important. Employee benefits can be. Employee benefits can be given in two forms. Employee benefits can be given in the form of cash. Cash does not mean physical notes or currency notes. Cash means any payment made in cash or through bank transfer. So most of the employer nowadays transfer the salary directly to the bank account. That is my first. But don't forget, you can be given remuneration or salary in kind also, which is called perquisites. The students who have studied income tax will remember there are different varieties of perquisites, like common is house, car, okay, nowadays Wi-Fi, mobile, watchman, driver, gardener, child education directly paid by the company, club membership fees, wow, directly paid by company, and so many. Even these perquisites are also a form of employee benefit and will be covered by the standard. You have to account for them also. Next point to be understood is employee benefits may arise due to legal or contractual or constructive obligation. Now what do you mean by legal? Let us see legal. In India, some benefits are paid because of the law. Example of legal benefits provided is, let us say, gratuity, because there is a Payment of Gratuity Act, or some companies come under Payment of Bonus Act or Provident Fund, ESI, Employee State Insurance. So subject to how many employees you have, what kind of organization do you have, there are rules under which you will have to pay these benefits to the employee. Contractual means agreement between employer and employee, formal agreement between employer and employee. So when you join a company as an employee, they will give you one appointment letter. In that appointment letter, they will write down what are the basic salary, HRA and other benefits you are going to receive, contractual. But there are other forms which is called constructive. This is neither legal obligation nor contractual obligation, but then it is due to past practice. It is a business practice, and because of that, the company has to pay this benefit to the employees. For example, which you know, Diwali bonus. Even though company may not come under Payment of Bonus Act, it may not have been mentioned in the agreement. It may not have been mentioned in the agreement with the employee that he will get a bonus. But for last so many years, the company has been paying Diwali bonus to its employee. And suddenly after 10 years, they can't say, sorry, there is no legal obligation on us. Sorry, there is no contractual obligation on us. So that it becomes a constructive obligation, an informal obligation. Or for example, vacation, paid vacation. Company allows the employee to take 5 paid vacation in a year, even though it is not contractual or legal, but they allow that, okay, you can take 5 paid vacation. That is also a constructive obligation. Okay. Now the next is a small summary we have prepared. Employee benefit can arise due to formal agreement, which is the terms and condition agreed between employer and employee, and it is mentioned in your appointment letter, and then subsequent agreement, and then legislative requirement, and the last informal practice. Then it is called constructive obligation. Is it right? Today you do one more small homework which I have just now explained, just now. The institute answer is written in detail. You can read it at your own convenient time. Whether an enterprise is required to provide for employee benefits arising from informal practices. Informal practices means constructive obligation. Okay, companies, for example, companies pay Diwali bonus every year, and it becomes a constructive obligation. It cannot be avoided. Or for example, paid vacations are given to employees, and it has become a past practice. It cannot be avoided. Hence, informal practices also give rise to employee benefit obligation? The answer is informal benefit also give rise to employee benefit obligation. Okay. Now one more thing about the application of this standard, something very important, whether share based payment are applicable, under where share based payment come under the scope of this AS15. Share based payment means employee stock option plan. Whether the company which has given ESOP or employee stock option plan, under which the company provide benefit in the form of share, company issues shares either free of cost or at a heavy discount. Whether ESOPs or such share based payment are covered by AS15, the answer is not covered. The answer is not covered. Very important, share based payment are not covered by the standard. Then how do I do accounting of share based payment? For that, institute has given a separate guidance note. The institute has given a separate guidance note. Share based payments are not covered. Why? Because the institute has given a separate guidance note. So today we'll stop here. We'll continue in the next lecture. So as I always say, at the cost of repetition, please like the video, subscribe to the YouTube channel, share with maximum number of your friends. To get the maximum benefit of all our accounting standard lecture uploaded on the YouTube, you can purchase accounting standard book from our website vinod.in, or you can purchase from amazon.com or amazon.in. Okay. Plus you can also purchase financial management lectures from our website vinod.in. This will really help you, and you will definitely get benefit out of it. Definitely, surely you will get huge benefit out of it. Don't think everything should be given free of cost. If you pay some reasonable amount, and if you are getting a very high quality lecture, nothing wrong with that. Okay. But if you are used to that free thing every time, then it will not serve the purpose. We are also running an organization, hence you must cooperate, participate, and only then we can provide more subjects, more lecture to you at a very reasonable price. Thank you very much.